and let's just get this kicked off a little bit. A little bit about me. My name is Rick Sadler. I've been trading now for somebody asked me today in the trading room, and I got to thinking about it. And it was about the time my oldest son was born, so that's close to 30 years ago when I first started. I've been trading full time now for a little over 15 years, about 16 years, trading full time. And man, it has been an adventure. There's so much to learn, very exciting. No day is never, there's not a day that's ever the same. It's always a new adventure. Here at Hit and Run Candlesticks, we have under the Hit and Run Candlesticks umbrella, we also have right way options. We have trader vision, and we have a new product that we're going to be launching that we'll talk about at a later time. I really don't want to talk about that right now. I'm gonna, let's see here. There's one thing, a couple of things we truly believe in, and that is just simply following the chart. We're technical traders. We follow price. We follow the trend. We pay attention to support and resistance. Price action is huge. That's what we want to do. We want to follow price action. Being swing traders, we're looking for overnight. That constitutes a swing trade. Could be 3 days, could be 15 days, could be 20 days. We're going to follow that chart. As long as the chart is trending, we want to be trading it. We may be selling it or selling a partial as it moves up, and then when it pulls back, who knows, we might buy more, or we might, after we sell the first, say, half, we may allow the second half to run up and just moving our stop up. One of our biggest goals is putting in some double-digit gains. We have a fairly impressive record since the first of the year, tracking it because of the new year. And there's quite a few trades I'd be glad to share. If anybody wanted to come into our room and check it out, we could certainly share that. I doubt we'll have time today. Where there's some, 40, 50% trades, a lot of 20%ers, a lot in the teens that are very, you'll be able just to visually see how you might be able to trade them. All right, let's get through a couple little things here real quick. There we go. Quick little disclosure. There's a high degree of risk involved with trading equities. We all know that. It's extremely important that you don't bank on what happened in the past. Every day's a new day. Every trade's a new trade, and you can't just simply take, well, this happened last time, and assume it's going to work this time. That's why trading is so exciting. Hit and Run Candlesticks, right way options, strategic swing trade service, and trader vision, and all the individuals affiliated with Hit and Run Candlesticks assume no responsibility for your trading and investment results. Always trade carefully. Never trade with all your portfolio. Trading is a long marathon. It's not a sprint race. If you're looking for that lottery ticket, I think if you go down to your local gas station or most grocery stores for $5 or $1 or $10, you can buy a lottery ticket, and that's what I would do. Trading is not a lottery ticket. It's a job. It's something to take serious, and it's always best to get some advice from your broker as well. Okay. Let's create some wealth with chart patterns. This is one of the things that I am very dear to my heart, is trading chart patterns. Unfortunately, nothing can be traded on its own. Just all by itself, nothing can be traded. Price action, all by itself, well, I take that back. Price action might be the only thing that could be traded by itself. But what we're going to do is we're going to add a few things in there, such as always trade within a trend. Never go out there and try to bottom pick. I know very few traders that actually make a living over a long period of time trying to pick bottoms. Very, very, very few. And the ones that do, they have so much money it doesn't matter. They can live through any kind of bad news that happens after they pick that bottom. Someone trying to pick bottoms with a modest account probably won't do so good. Be a student of price action. I'm going to say this: price is king. You've probably heard this from hundreds and hundreds and hundreds of other traders, and there's a reason why successful traders always say price is king, because it is. Nothing comes close to beating price. Be a student of chart patterns. You want to make the big money, follow the chart patterns, and we're gonna look at a couple of those for our time here. Keep in mind that the time is limited. There's only so much time that I have today, so please look us up. HitRunCandlesticks.com. Check us out a little bit. There's a lot of stuff on the home page, and from there that you might find useful. We'd be more than happy to answer any questions we can. Just like I say, there's only so much time today. Now, every time you take a new step in trading, you learn something new, or maybe something not to do. It's always kind of a step up in your education. One of the most one of the most financial aha moments that I ever had was realizing the importance of chart patterns, such as a bullish W pattern, inverted head and shoulders, cup and handle, or bull flags. Believe me, there's far more than this. I'm just, it just fills the slide up. But when you learn how to put price action and the trend and support and resistance, when you learn how, and even indicators. Now, I'm not a big indicator user, and if you use indicators, that's fine. If it works for you, please keep using them. But if you put all that stuff and then you add another element like the chart pattern, how to trade the chart pattern, it will open your door up like you've never seen before. And that's what truly happened to me. I see that's happened to many of the people in our trading room, our members, our subscribers. When they're able to put all those ingredients together, put all the ingredients except chart patterns, they make money. Throw the chart pattern ingredient in there, and it's a world of difference. So the first thing we want to do is we always want to make sure that we trade within a trend. Always trade within that trend right there. When you're trading within a trend, it keeps you within a guideline. And when you're swing trading, you're swing trading up, you're swing trading back, you're swing trading up, you're swing trading back. So you're looking for all these little price patterns in here and just swinging as it moves up. I mean, think about it. If you bought it right here and you just bought it and left it, look where you'd be right now. Well, you can do that by following support and resistance and price action. So let's take a look at some price action. Now, we use candlestick signals. Candlestick signals was probably, in my opinion, the greatest invention there ever was when it comes to stock trading. Because what they'll do is candlestick signals will tell you exactly what your opponent is doing. I mean, it's like playing a game of chess, and you get to see, you get to think. I mean, in trading, you don't get to see your opponent. With candlestick signals, it allows you to see your opponent. It allows you to see what the big boys are doing, what the little boys are doing. It allows you to see what everybody out there is doing. They all say something. A belt hold says something. You just have to realize what it says. I know a lot of students that we have. They'll come to us and they've read a few candlestick books, and they are a student of price. They're a student of candlesticks. And man, they can name them, they can see them and name them right now. But when you ask, well, explain that to me, and what does it mean? What is it telling you? All of a sudden, the confidence is not quite there. This is something we teach over and over and over again. is, well, what does a belt hold mean? What does a belt hold need to do to prove itself? A bullish engulf. What is a bullish engulf? What does it mean? How do I trade the bullish engulf? And it just on and on and on and on, that we see this where traders will come in and they want to trade, and they've certainly done their book reading, no doubt about it. But when you put it into real life action, what happens is a bullish engulf is just bullish, so I'm just going to trade it bullishly. They end up getting stopped out. The chart ends up going higher, and they're wondering what just happened. Well, what they don't realize is they may have been looking at a chart that was in a trend that's actually very, very nice and working. But if you're too busy following, the what we call the hard right edge, and say we're pulling back, like right here. Say we're pulling back a little bit, but if that pullback is in the right place on the chart, that is good. That's a positive thing if it's the right place on a chart. And then boom, there we go up with a bull kicker, and before you know it, the price is now up 3 times as high, and maybe you're in it, more than likely you're not, because you were knocked out because of not knowing correctly how to read price at the right place in a chart. So be a student of price action. Recognize things that learn to recognize what's true and what's not true. For instance, right here, when you see this candle, more than likely, I would say that the majority, especially we'll say new traders and traders that struggle, you'd be in this category more than likely. When you see this candle here, it probably gives you a little bit of fear. I mean, you are like, oh my goodness, a little bit nervous. Well, that's not what that candle means, not at all. And learning what that means and how to trade that, how to accept it, is very important. You can see what this chart ended up doing. So, I'm sorry. So be a student of price, understand price. Now, let's talk about chart patterns, and that's what today is about. The big money is in the chart pattern, or rather, the big money is what comes after the chart pattern. Don't get me wrong. I'll trade inside a chart pattern all day long. I'll say a bullish flag. I'll buy inside the flag anytime, no problem. But the money is made on what comes after the chart pattern, so the breakout. And typically that's called the run or the leg. You may have heard, well, when it breaks out, we should see the next leg. You may have heard it that way. So what we want to do is trade the leg or the run. We want to trade those. Again, I have no problem at all buying the flag or the wedge or the pennant. I have no problem buying inside those chart patterns. But again, it's that breakout, it's that run that makes you the money. So what we're going to do is we're going to trade that run, and we're going to use price action and support to trade once that run or leg starts. So this would be a trend. So once you break out, it's adding to the trend. In some cases, it may be a new trend. In other cases, it may be a continuation. You know that all chart patterns, what we would call Western chart patterns, all they are continuation patterns. That's it. And if you're and we are talking only bullish here today. And when you're talking about a chart that maybe has had a bottom and has moved up, and then it puts in a chart pattern, all that chart pattern is a continuation. And what's it continuing from? The bullishness that got it there. So we're looking for continued bullishness. Alrighty, let's take a look at an inverted head and shoulders. Now, inverted head and shoulders I have found to be one of the one of the best. That's not the only, and it's certainly not the greatest. I think you could put a couple of them in there. But for a couple of chart patterns we like to trade, like the hit and run candlesticks rounded bottom breakout, we call it RBB for short. When that setup occurs after an inverted head and shoulders, the probabilities have just gone up a huge amount that the trend will continue. It does not eliminate the fact of pullbacks. It does not eliminate profit taking. But what I have found is that when you come off the bullish W pattern, that the trend tends to run higher. The bullish inverted head and shoulders, if you're not familiar with it, you have a shoulder right here, and then you have a head lower than the shoulder, and then you can have a higher shoulder higher than the head. So there's the shoulder, there's the head, and there is the shoulder. And once we start to break out of that, then this becomes very, very, very bullish. Say the chart moves up and it breaks out, starts to pull back like this. We see that new traders or struggling traders, they tend to get nervous and just leave this trade alone. They don't do anything anymore because it's been up. More than likely they would have bought it here, not here. This is bottom picking. So maybe they bought it here, maybe they bought it here, and they're up 3-4%, maybe 5-6%. Fine, that's good money. And then it does puts in some price action that would make you a little bit not like the chart so much. Well, then they close out of this. But what happens is after this, the chart continues to move. This is opportunity. Not this day is not opportunity, but what it represents. This candle here would represent the likelihood of a lower low. The low and a lower low. That's terrific, because what will that do now is that will come back and set it right back on support. And that's where you want to be buying. And then price starts moving up. And now this is where you make your big money. Trading for 3, 4, 5%, it just doesn't work. As hard as you try, you can't make that work. Because we all have losses. No one's immune to losses. And when you have a loss, more than likely, it's not going to be 3, 4%. More than likely, losses come in at 5, 6, 7, 8%. So you can see how that if your losses were a higher percent than your gains, how can you possibly make money? All this would be is a hobby, and we want it. I find it can be a hobby, but at least let's make money at our hobby. So let's look for those double-digit gains. So this is an inverted head and shoulders, and let's take a look at this chart right here. Here's the chart we were just looking at. So there's your shoulder, there's your head, and there's your shoulder. Funny thing about stock charts, it's more common to see sloppiness than you are to see the perfect chart pattern. And you have different shaped candles. If you look at this, all the candles are the same size. Everything is perfect, absolutely perfect. But here, man, you get people saying, okay, oh, that's a hangman, and that can't be good. It pulls back, and then we move up here. Well, now we can't trade this because now we're into resistance, and I mean we find all these things negative about it. But if you take this chart pattern and you follow the inverse head and shoulders and you don't try to trade right here, this is only worth the 4 or 5%. This is small money right here. What you want to do is let this break out and then trade the stock. There's 2 types of bottoms in every chart, and there's only 2 types of bottoms, and these 2 types of bottoms can be all over the place. And one type is the bottom, which you can't deny. Based on what you see here, based on what you see on the left side and what you see on the right side, no one can deny that that's the bottom. You can't deny that. The question is that the tradable bottom? And see, that's where I say no, that is not the tradable bottom. The tradable bottom is going to be about this area right here. So as we break out of this area right there, that becomes the bottom to trade. As we move up, we see a little pullback, we throw some support in there, you know, we realize we're just putting in a little channel, consolidation channel, and before you know it, we're moving up here. By the way, all these charts, these are all charts pulled off the members' trade ideas, either with hit and run candlesticks or right way options. And so these aren't like cherry pick charts. These are charts that we talk about all the time. We've been in, members have been in. Oops, what did I do? Go wrong way. There we are. Okay, let's talk about the bullish W pattern. Bullish W pattern. Now, bullish W pattern is, it simply makes a W. You're coming from a downtrend, and it finds buyers. It hits the buyer, or buyers step in, and then it rallies up. Basically, this is nothing more than a relief rally. This is not any kind of reversal. Nothing here says it's a reversal pattern. It's just simply a relief rally. It finds resistance at the top. It comes back. It does not have to be a perfect double bottom. This one is just represented with a double bottom. I do like the pullback to be higher than the double bottom. I would rather that this leg to the downside doesn't go lower than this side over here. So a double bottom is fine. Up here would be fine. And then it starts moving up. And then when you get the breakout, that's when this becomes tradable. So if it breaks out and you see a candle like this, that's opportunity. That's opportunity. Maybe not this day. Where, you know, I'm not suggesting we're buying this day. What I am suggesting, though, is we've broken out of the bullish W pattern, so this becomes support. Let it pull back. We want to look for that price action that gives us the clue to be a buyer, and then the bigger trend. This is where the double digits come from. This is where the 20, 30, 40, 50% trades. Now, believe me, you're going to have a lot more 20% trades than you are 50%. Just like you're probably going to have a lot more 15% trades than you are 20%. It just stands to reason. But when you can start taking all those 4 or 5% winners, and now you could move those into 10, 12, 15, 20% winners, man, what kind of difference would that make? And well, for me, it makes a huge difference, absolutely huge. So this is the bullish W pattern. And here's the bullish W pattern again up here. Sort of perfect, not so perfect here. This is one of the hardest things for traders to get comfortable looking at. I mean, it's, you know, you can buy a book and you can see this all day long. So you start looking for a chart that looks like this. The odds are pretty slim. I mean, you can find them. This was found, and you can certainly, they're there, but they're so far and few between. Most, since we're talking about the bullish W pattern, they look sloppy. Look at this. Down we go. We've got the low. We've got the high. Here we pulled back. This did go lower, and this is one if I had to choose between two different charts, one that went lower, I would probably take the one that went higher. If there was one went lower, one went higher. The difference with this one is we've got these long wicks down here. So once again, you have to know what candlestick signals are telling you, what the price action is telling you. And then we have a bullish engulf in here to boot. And then as we started to break out, you see how we crossed right here? And then look how we pulled back right to that support. So this is not the trade. The trade is from here up. So the trade could be here or when we break out of this candle right there, right across there. And then there we go. And then through here, you can see chart patterns like there's a little bull flag, a bull flag, and as long as they don't break support, these things are just killer money makers, absolutely killer money makers. Let's see here. Cup and handle. Cup and handle. Remember, all these chart patterns are continuation patterns. That's all they are. So if you're seeing a cup and handle, we're coming from a bullish trend, you can see it right here. So the bullish trend comes up, some sellers start taking money off of it. That's all it is profit taking. If it was a full-fledged correction, you wouldn't have this. And usually corrections are a little bit lower too. They definitely pull back. Well, you can also see in through here, watch the price action. Do you see any real sellers to speak of? Or are we actually seeing a lack of enthusiasm from buyers? Maybe that's all we're seeing. Now, that's when we look at the chart. So we don't see any huge sellers. We just see a lack of enthusiasm from the buyers. Well, there are some sellers that are going to take advantage of that, and they're pulling us down. Well, we get down here, and the bulls are all of a sudden saying, hey, maybe we better step back up in this. There's another reason why we pull back as well, and that is because when a chart moves up, the higher it gets, it's likely to run out of energy. Because what makes a chart move up? It's new money, or it's money. Money makes a chart move up. That's what pushes a chart up. So when the chart gets up too high, all of a sudden the money, we call it the smart money, says, hey, I don't want to be buying up here. So the smart money takes some money off the table, and they sit back for a little while. And while they do that, price pulls back. And it pulls back to an area, usually support, and this is where the smart money says, okay, it's now at wholesale prices again, and they start bringing it up. Well, there we start our cup right here. And then as we start rising up, this is the smart money buying, up we go, and what happens? We get up here near the top, and we hit a little bit of resistance. We have a little bit of profit taking, and that's what gives us our handle. And then that's when new buyers step in. When we see the pullbacks like this, money flows in. So a cup and handle is a continuation pattern. All of the Western chart patterns are continuation patterns, whether they be long or short. Again, today we're only looking at the long patterns. Here's the cup and handle again, and here it is down here. Once again, it's not perfect, is it? Here we have a low, a high, a low, a high, double bottom. Oops, we went lower. So sometimes when you're focused on just the candlesticks and that's all you do, man, I can see where that wick right there, that would make somebody nervous. But the truth of it is, that has nothing bad about it at all. Nothing at all. Look at that candle there. Man, that's got to be something bad there, right? Nope. That does not mean anything bad. One of the secrets behind candlesticks is they require confirmation. Very simple. One candlestick by itself, it's just noise. It's just a bull and a bear out in the street throwing punches against each other. So you have to have confirmation and follow the chart pattern. If you can, or the trend and the chart pattern. You can see that if you started drawing a trend line on this, I think my battery to my mouse might be going dead here. You start drawing a trend line, you can see that it never really broke the trend line. Not at all. It's still moving up. So here's the cup. Boom, 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 boom. Can we call that the cup right there? And maybe that's the handle. So the cup goes up. The buyers are pushing it up, and the smart money says, hey, maybe we better take a little off the table. They take a little off the table. New money starts flowing in and continues to push it right up. So, and what happens from here is on these continuation patterns, they're projecting price moving up. If the buyers didn't come in and take it up, let me start that over. Buyers coming into the handle and breaking us out, what they're doing is telling you that they want price to go higher. And as traders, we're retail traders, what we do is we take advantage of knowing that fact. It's kind of like they don't know that we know. Well, we do know. and we take advantage of that run right there. And that run goes up, and that run will continue a run until it stops. It's like a trend. Has anyone ever heard a trend will be a trend until it's no longer a trend? I know that sounds corny, but it's a true story. If you use support and resistance, and if you draw trend lines, a trend can go forever. Just because it has a little pullback doesn't mean it breaks the trend. A lot of traders miss out on the big money because they get up here and they see this, oh, this trend's over, this stock's done. Not at all. This stock is just getting started. This is small money compared to what comes after it if it's traded properly. In fact, one of the things we try to teach in the trading room is, rather than beat yourself up every day looking for the new hot stock, if you find a trend, a stock that's trending, own it. Own it. I don't mean buy it, own it. Make it yours. Study that chart. Maybe own it at the right time. But if it's trending, it's working. If the trend is 3 months old, I hear a lot of people say, well, man, this thing has been up for 3 months. How much more can it go up? I always ask, well, how much are you looking to make? Oh, man, I'll be happy with 10, 12, 15%. You think it can't go up more than that? Oh, no, I know it can. But it's getting so high. See, that's letting your emotions, and that's not, it's not working the chart. That's letting your emotions. That, in fact, that's actually probably something you heard somewhere on a webinar, and now it's just being repeated back. Just simply follow the chart. A bull flag. A bull flag is a beautiful continuation pattern. Usually what happens after big runs, you get those little pullbacks, nice little bull flag. I'm not a huge fib user. I have nothing against it. It just doesn't fit into my little world that much. But where I will definitely use it is when I see a stock rally up, I might go put fib lines on it. If that pullback stays above the 23.6 retracement, that is perfect. That is well within the normal profit-taking, don't be concerned category. So anytime if you use fib lines, try that sometime. Put your fib lines on it. As long as it stays above the 23.6, then watch for the chart pattern, watch for the buy signal. You can certainly be a buyer in here, especially, say in this case, where you have a low, even this day here, ugly day, it made a low, but look where we are now. A high, higher low. So at the close of this day or during the day, this could certainly be bought, and it can certainly be bought on the breakout or any kind of pullback testing this support area. And here's a chart. Here's a chart with a little flag on it. Here's a nice little pullback right here. And you can see that if this is support, right here we broke out, right there, if that's support, you can see we never even made it back to support. So it's just a normal little profit-taking pullback, and then it came back with a bullish engulf. So maybe you did. You know, maybe you've been in this and you decided to get out, so you get out of it. No problem. Don't dismiss the chart. That is, if there's a takeaway from today, and this is not necessarily what I came to talk about. What I came to talk about was chart patterns. But if there is a takeaway, if you make money in a chart, if it's moving up and you close that position, making money, don't dismiss it. Don't run out and think you can't trade this again. You can. You can go beat the bushes you beat the bushes looking for another trade. I mean, we always have a watch list ready to go. But remember, a trend will stay a trend until it's no longer a trend. This trend wasn't broken. So what's wrong with getting back in it on the bullish engulf or getting back in it on the breakout? Look what happened. Beautiful, beautiful. So here's a little bullish rectangle. Typically what happens here is you have a chart that moves up. And leg one, you may have heard this, leg one. This would be leg two, or wave one, wave two, wave three maybe. So we've got leg one, and leg 2 is just consolidation. I see traders all the time trying to just, I mean, they work their little tails off trying to make money in here. Don't. Man, you see this making support, that's a great thing. When you can start spotting that the bulls can't take it higher, that's another thing. I hear all the time someone say, man, this chart must not be any good because the bulls can't break it out. Patience, grasshopper, patience. Just because you think it might need to break out here or here or here, and it doesn't mean the chart's bad. Stocks move on their own good time, not because we want them to. So it moves sideways, everything's fine, everything's hunky-dory, moving right along. All of a sudden, what just happened? Somebody, or a lot of bodies, came in here and pushed this thing right above that resistance level. What does that tell you? That is the one key thing there now. Here we have a chart pattern, a bullish rectangle. It's bullish because we came from low to the highs and we're moving sideways. The breakout is nothing more than a sign that the bulls plan to continue higher, continue the chart higher. So this is where we want to look to be a buyer. On a pullback in this area, or a pullback and then a breakout of right in here. In fact, I would suggest that, or may I make a suggestion that if this chart looks like it can go, say, 30% higher, maybe there's some big resistance up here at the top where we might need to take profits. Well, I ask you, does it matter whether you buy the chart here or whether you buy it here? Now, I love the people that say, well, yeah, you're better off if you buy it here. Usually that's the people that are struggling and they're trying to drive a truck through an eye of a needle. Not always. Because more times than not, what happens is you miss the chart, you miss the trade. But if you just looked at this area as a buy, I mean, if you're able to make 30%, does getting a 1% entry make a difference? Better entry? No, not if you're looking at a 30% run. Okay, where are we time-wise? Oh, we're getting close. So here is the bullish rectangle, and right there is what I'm looking at. Bullish rectangle, right there. Sloppy, welcome to trading. I wish they all were perfect like that, but they're not. We just have to learn to recognize that, and there's the breakout. So we can be a buyer, and look where we're going here. Again, these are charts that we've all talked about. These are all charts that is every day in the trading room. Quick little recap here. The big money is in the chart patterns, or rather what comes after the chart pattern. What we want to do is trade the leg or the run, and we want to use price action and support and resistance to help us with that. So trading can be very easy. One thing we focus on is keeping our charts extremely simple, very few indicators at all. We have something we call a naked chart, which is nothing but price action, and then we draw support and resistance lines on it. That is, man, talking about taking muddy water and make it clear again. You should try that one time maybe, is don't interrupt your current charts, but if you don't have, say, a naked chart, try putting a chart up with nothing but candlestick signals on there. And just try it. And first, you won't like it. No one does. No one likes change. But then try it for a couple of days and just try to look at it more and more each day. And I think what you'll find is that muddy water will become crystal clear on how to trade that chart. So again, from me and everybody at Hit and Run Candlesticks, we have 4 great coaches they're on our team there. And if you go to our website, right there, right, that little, where's my arrow? I seriously think my mouse battery is, oh, there it is. Right there, click for 30-day trial. It's only $14, and you are a 100% member. You get access to anything, everything, all questions with hit and run candlesticks. If you're interested in options, we also have an options offer. Same thing, $14. You can do both if you want. And but the trading room's open now. I'll be back in there myself in about 15 minutes, and I would sure love to see anybody there. I can't tell if there's any questions or anything. I don't. Yeah, I can't tell if there's any questions. I don't think I have the right thing up to see any questions here. I'm scared to click on anything. I don't want to delete anything. So, oh, there we go. There's one thing. So if there's any questions, or maybe I just opened it up. Oh, maybe not. Okay. Well, I'm Renee. That concludes my little webinar here. I certainly want to thank you for inviting me. I really look forward to being invited again. I hope so.